Hi. Think back to the newspaper headlines today or any day, or for that matter, what television talks about, business television in particular. Uh, Depending on what happened in the markets the previous day, they will have a nice little explanation that the market went up because of XYZ or went down because of some equally valid reasons. Remember, a lot of it is just noise. And it is just retrofitting reasons to something that happened. And if the opposite had happened, there would have been equally good reasons. They could have found why it happened. I mean, a good example is last week, middle of last week on Wednesday, on July 31st, the Federal Reserve of the US, which is the central bank of the US, just as RBI is for us, they had a meeting, after which the reading of the meeting was that the Fed is more dovish, meaning Fed is more likely to cut interest rates, and the markets rallied. And there were all these newsletters and analyst reports and strategist reports and press reports explaining why that was the rational reaction, why the market should have gone up after that, what the Fed said. And the next 2 days, the US market went down, and there were equally smart and intellectual sounding explanations with charts and graphs as to why that had to happen. So within a space of a day, you found reasons for a market rally and you found reasons for a market crash. And if you see, that is how it happens. I mean, India goes up when international markets are going down. It is that we are now disconnected and we are on our own path. And if the markets elsewhere crash and India also goes down, obviously it is global contagion and so on and so forth. So remember, whether it's a strategist, whether it's an analyst, whether it's a newspaper writer, whether it is someone writing in the press or appearing on television, they have to fill up the pages, they have to fill up the hours with some explanations which sound good but doesn't mean that they are actually valid. There is a great book called Everything is Obvious Once You Know the Answer. So with the exact same set of circumstances, you can explain something depending on what has actually happened. And one of the examples I give is also, if you look at the central bank actions itself, let us say a central bank, let's say the Fed does not cut interest rates. So you will, and if the market falls, you can always say, yes, of course, markets are correlated to interest rates. Equity return expectations go up when interest rates are high. So if interest rates remain high, how can the market go up? But if the market does go up, you will say, oh, the central bank did not cut interest rates because the economy is doing so well. So obviously, if the economy is doing so well, markets have to go up. So exact same set of circumstances, you will find a valid explanation as to why one thing happened or the exact opposite happened. So filter out the noise and do not take experts at face value. And if you track what people say over a period of time, you will see this very, very vividly. Which is why I say that we want to be responsible for what we've said in the past, and we're not right 100% of the time, obviously, but we want to stand by what we said in the sense of owning up to it and then saying that yes, we were right here and not so right here. So I hope that helps and gives you a framework about how to look at what you see in the media every day.